Will we see a breakout relief rally? Vince Lanci joins me now after a long hiatus. Vince, thanks for being with us.
Thanks. It's been a long time. I hope you enjoyed your travels.
Vince, I know everyone's eager to get your thoughts on the current state of the gold market, but before we get to that, let's go over some news items we saw emerge earlier this week. Let's start with South Korea, set to open a gold exchange in 2014. Now, earlier this year, we saw Deutsche Bank set to open a gold vault in Singapore. UBS and JP Morgan had done so previously. We saw China launch 2 new gold-backed ETFs. I guess my question to you is, Vince, is what does this say about the appetite for gold in Asia?
It's a comment on gold, but it's a comment on global economic power overall per se. So what it really means is that if you're setting up a vault or an exchange, which is what we're looking at, or a storage area in the Far East, you're expecting business. And these people are just setting up shop. And what you're looking at is the migration of demand from Western countries to Eastern countries. Just like with iPods or whatever other product you're talking about, the fresh demand or the anticipated demand for gold in the future will be in the Far East. So bullion dealers, they want to set up storage facilities so they can trade around their inventory and offer these services. Opening up an exchange, that's just common sense. If you look at the inventories in the West are dwindling on the COMEX, while volumes are increasing as you move eastward, although maybe not at the pace you want, which I think is something you want to talk about.
Right, that's exactly my next point, Vince. Let's look at those 2 gold-backed ETFs emerging in China, which are falling short of expectations. They both raised 195 million and 66 million respectively. They were looking to raise 800 million. My question to you, Vince, is was this a bad time to launch an ETF when ETFs, as we all know, are hurting right now?
You're right. The timing is horrible. But who could know? The product is right. The region is right. The idea is right. But when you look at 2 things that we were discussing off camera, that why would the demand be so lackluster, considering the physical demand, I should say, considering the sell-off in gold? My conclusion and the conclusion of others is that China's economy is in much more difficult times than they'd have us believe. I'm looking for a harder landing in China, and that would account for the decrease in demand or this product falling far shorter than their wishes. And
also, as a final note, Vince, a note from South Africa's Standard Bank showing the premium that Chinese investors are willing to pay on gold has fallen to $22. That's down a fifth this week.
That's significant. So that means Chinese demand, at least among the investor grade as opposed to the government, demand is very elastic. I mean, to drop that much in a week, that's pretty significant.
So Vince, let's get to your gold thoughts now. Last time we spoke, you mentioned that a wedge formation was happening. That's exactly what happened. The market washed out. We're now speaking today. What are your thoughts?
There was a wedge. It was a very easy wedge to identify. Many technicians saw it. Some were calling for a breakout higher, some lower. It just seemed to me that it was a continuation pattern. And I believe we discussed this, and I stated that if it went down there again, it's not going to hold. It did not hold in a much bigger way than even I thought it would. And the market just washed out as deflationary pressures on many things. It seemed that any news that came out was bearish for gold. So we had that washout, and that pattern is completed. So now where to from here, I guess, is a question.
And Vince, I had Dennis Gartman earlier on this week. He's back to being bullish on gold. Is that a signal for you? Does that make you bullish again?
Well, although I wouldn't call him part of the herd, I wouldn't say that I'm going to follow him just because he said something. I will say this, if he comes out saying something, if he has an opinion, it's probably based on some reliable analysis. What I would say to agree with him is when I look at the chart, we have a V-shaped bottom, which is very rare in gold. And usually you're negatively suspicious saying, oh, it's a rally to sell. But I see CFTC issues coming up where the bullion banks may be permitted to deal in physical bullion again post Dodd-Frank as they lobby for grandfathered clauses. And we have brokered through a significant area back in above a trend line that was part of that flag or pennant. So I would say if you look at the chart right now, you're going to see a situation that's no longer, aberrantly negative, but neutral to positive. It's a steep incline. I'd expect pullbacks. But if you are bullish, you should be buying dips right now. And I don't disagree with Dennis, but I'm not fully there yet.
What I find interesting, though, Vince, is everyone was speaking about how bearish the market had become, how we were about to enter bearish territory for 5 to 10 years now. Do you think that thought process has been put to bed?
Well, if it has, it's premature. I think if you look at indicators like Elliott Wave, you will see that technically the bull market is over, and that we have what I think waivers would call a truncated 5 or a failed new high. And then the market broke 1400 as one of my engines, probability engines, predicted. But in no way did I think it would go to 1200, which is shocking. And also as a comment on the illiquidity of gold. You can't get out when you want to. But to answer your question directly, I think you should be people like Dennis Gartman aside, you should be very suspicious of this rally, because right now it's still a relief rally. V-shaped bottoms are dangerous in gold. It rarely happens. But there are some news items surrounding it that make me less scared than usual. So I sound non-committal, and I'm pretty much non-committal. I have my portfolio the way it is. I was trading from the short side. I am no longer trading from the short side. I am going to be trading from the long side if we get above 1342.
And when you mention news items making you less scared, are you alluding to Ben Bernanke perhaps suggesting that QE will not end anytime soon?
Exactly. When you hear, like, what was the word of the month when gold was swooning?
Taper.
Taper. What's the cure? And I think we talked about this. What is the cure for a taper? The untaper. If you keep talking about taper, you talk the markets down, and before you know it, you don't need to taper. You need to not taper. And so, when Bernanke said earlier on, he said, we'll continue as long as we need to. That's just, the stock market took that the right way, and gold took that the right way. They cannot stop. This could be a bubble as big or bigger than 2000 if they stop QE at the wrong time. And so they can talk it down all they want. They cannot stop this until the economy recovers legitimately. Detroit just filed bankruptcy. Printing money didn't help that, but they can't stop printing money.
All right, on that note, Vince, that's all the time we have for today. Thank you.
Thanks. Nice to be here.
And thanks for watching Reset. Email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.